Ottawa's housing market is holding up surprisingly well, but not for everyone. If you're a condo owner, a buyer, or an investor, the latest trends might surprise you. While most property types are climbing, condos, long seen as the affordable stepping stone into the real estate market, are now the only major segment actually losing value. And it's not just a blip on the chart. This has been quietly unfolding for months. Today, I'm going to break down exactly what's happening, why it's happening, and how it could impact your real estate plans. The big picture. Right now, Ottawa's overall market is balanced. You'll see here on this graph in the July stats, 3.2 months of inventory. It's, in a typical market, 3 months, 3 to 4 months equals a balanced market, and that's what we are in right now. Freehold homes, especially single-family properties, are holding value and posting modest gains. You'll see here, single-family homes in July were at $704,800, up 2%. Townhomes are the star, performing really well, up 8%, 8.3% exactly over a year, where the average price is $468,000. Condos, well, not so hot. As you're seeing here, a dip of 1.6% year over year, the benchmark price. That means if you own a condo worth $400,000 last summer, statistically, it's closer to $393,500 today. And while that might not sound dramatic, it's a big deal when everything else is moving in an upward trend. Think of it this way. If the rest of the market is rising with the tide, but condos are dipping, it tells us there's something specific to that segment that's holding it back. Let's take a closer look at it. Why are condos cooling? The main driver behind this shift, and keep in mind, this isn't just Ottawa. We're seeing similar patterns in other parts of Canadian cities, but Ottawa's version has its own twist. Number one, the rising supply. Condo inventory has been climbing, partly due to new construction completions in the core and East End. More choice for buyers equals more competition among sellers, which puts downward pressure on prices. Example, if two nearly identical condos, say in Centretown, hit the market, at the same time, both sellers end up competing on price and incentives. Second reason, affordability squeeze. Interest rates remain higher than they were at the ultra-low period in 2020 and 2021. Monthly carrying costs for condos have jumped, not just from mortgage interest, but also from rising condo fees. I'll give you an example. A $400,000 condo with, say, $750 a month in condo fees could be the same as buying a freehold townhome for around $500,000. The third reason why is lifestyle shifts. Post-COVID, we're in an era where there's remote and hybrid work options almost everywhere. And this has permanently changed and affected and had a direct impact on housing. Buyers are looking for more square footage, home offices, and private outdoor spaces. Things many condos that they just can't really offer. For the same budget, some buyers are choosing to drive 20 minutes farther if it means getting a backyard. We just recently helped a couple move from the Westboro area out to Merrickville, and they were able to actually put, I think, $350,000 in the bank, and they bought a beautiful country property because now they have the option to work from home. Investor pullback. Higher borrowing cost plus slower rental rate equals tighter profit margins. Some landlords are selling units that no longer cash flow. The whole point of being an investor is to grow your asset and to have positive cash flow. We're just not seeing it anymore. If a downtown condo rents for $2,000 a month, but the carrying cost is $2,500 a month, the math just doesn't work out, and we're seeing investors liquidate these assets time and time again. The condo fee, in these cases, it's usually the condo fee that's eating away at any positive cash flow. And then if there's, say, a special assessment or something that comes down the line, you have no control. Because you're in a condominium, you're just forced to pay it. Much different when you own a freehold property. We always say, control the controllables. In a condo ownership segment, you don't have as much control as a freehold. Now, this decline isn't spread evenly across the city. It's most visible in these 4 neighborhoods where the condo market is a big slice of the housing stock. So the first area we're seeing is the ByWard market. So I'm just going to draw a little circle right in here. That is a pocket that is really seeing tremendous downward pressure. And really it comes down to the high concentration of investor-owned units and short-term rentals. Noise and safety perception issues push some buyers towards quieter alternatives. The second area where we're seeing a decline would be right east of the ByWard market in Vanier. So this pocket here. The reason is there's just more affordable entry points on the freehold side. So why would someone buy a condominium if they can get a similar freehold property at the same price? Then they don't have to have all of those additional condo fees or concerns of special assessments. The third pocket would be Centretown, so just west of the ByWard market. So in this pocket here, and the reason being there's a lot of mixed and older high-rise building, and it's competing against the newer builds. When we're working with clients, they're typically looking for good value. And good value comes with cost, and cost comes with maintenance. So I'll ask you this question. If you're a buyer right now, are you gonna buy a newer building or an older building? Obviously the newer building if the price is relatively the same. So what's happening in this pocket is there's an abundance of older property on the market at similar price of the newer builds. So people are just going to the new builds. Why would they buy something old that they're going to get stuck into paying special assessments and rising fees? And the fourth and final area you'll see on the map here is kind of the Heron Park area. So big kind of circle. And the main reason why is there's a large cluster of condos and apartments that are really just old and tired. And there's so many new properties being built that are much better options and ultimately better value. Buyers are hesitant about long-term stability, especially in areas that offer more value and new construction. These areas aren't collapsing by any means, but in a market where most segments are rising, condos in these zones are lagging or losing ground. What this means for you right now. So for a buyer, this is one of the few times in the last decade where you have genuine negotiating leverage in Ottawa's condo market. You can be picky. Don't just settle for a unit that's just okay. Look for buildings with good, healthy reserve funds that have been managed properly. You need to know the financial health of the building. You know, whenever we're representing clients buying a condominium, always have it conditional for 2 weeks for lawyer to review the status certificate. This is the report card on the condominium. This will make sure that you are making an informed, quality decision and can almost predict the future of what's going to happen. I'll give you an example of a status certificate review. So I recently sold a beautiful 2-bedroom condo. I think it was on the 21st floor, just off Preston Street, overlooking Dow's Lake. Now, this condo was a bit of a mess. There was a lot of litigation happening between the builder and the condo group itself, but my clients loved the property. They just didn't like what was happening in the condo. The seller was motivated to sell. They wanted out. So we got on the solution side of it and we were able to establish a holdback. So there was a sum of money that was held back for a certain period of time to make sure that if there was ever a special assessment levied on each of these units, that cash could be deployed into it. So don't want to get into too much detail on that. If you have any questions, feel free to DM me or reach out, but there are solutions in that. My clients were taken back once they found out how severe this issue was. But once we slowed the conversation down, found a mutually beneficial outcome, everyone was happy in the end. Switching gears, what does this mean for a seller in this market? Well, you have to price strategically. Don't chase last year's pricing peaks. Staging and small updates can make a huge difference in this crowded condo market. Knowing your DOM, so that stands for days on market. Be prepared for longer days on market compared to freeholds. Best way to manage expectations is to look at the data. What does this mean for investors? Well, you have to run the numbers. The current interest rates and fees and old assumptions that you may have made, you have to let those go. You have to look at today's value and what it cost, and then parallel that with what you can do with your money on the freehold side. If you can buy a discounted property now and hold it through the future upswing, maybe that makes sense, but short-term cash flow may be tight. Ottawa's real estate market is still healthy overall, but condos are the outliers. More supply, higher costs, and a shifting preference are all adding to a softer market for the segment. Whether that's a red flag or an opportunity depends on your perspective and your timeline. Speaking of timeline, here's a quick video, check it out right here, on how long it takes to buy a home in Ottawa.